Awesome. Hey everyone, welcome back to another episode of Wicked Energy. I'm here for round two with Christine She Drills Guerrero. Christine, welcome back to the show. How you doing?
Yeah, thanks for having me on. I actually think that you might have been the first podcaster who asked me on their show. So, and then since then I've done about seven different podcasts. So it really just kind of ends the year nicely that you're the last conversation I'm having,
Hey,
before the year rolls over. So,
nice. No, that's I love to hear that. And it's funny you mentioned that actually, because I've had several folks ask me, they're like, how do you have such a wide array of people on your podcast? Like, do you find them? Do they find you? And I've always just kind of had a knack for finding people who I find either interesting or who like the up and coming people who are putting out content that I think are going to like ultimately do well. And mainly because I'm just interested in what they have to say. And lo and behold, I just cold call people for like, I mean, I'm in sales. So me reaching out to someone out of the blue and saying, hey, we should connect. For a lot of people, they get shy away from it, but I love it. I mean, so I'll reach out to, I've reached out to like CEOs of major companies, and I've reached out to people who have like 18 followers. And I'm like, I think you might be onto something here. So anyway, I'm glad we could connect again. And obviously this year's been an interesting year, but before we get going, I mean, how, besides you said getting over a cold, how's the holiday season? I mean, is that a big deal in your house, or are you just all work, no holiday, or what does that look like?
I mean, I was supposed to travel home to Tulsa, which is where I'm originally from, and be with my family. But when I got sick, I canceled my flights.
Yeah,
So
I don't
I
blame you.
literally spent like the entire holiday weekend just like taking naps on the couch and watching movies, but like literally didn't finish one entire episode because I always fell asleep in the middle of it. You know how it is when you're sick, you're
Oh,
just like
well,
comfortable spot, blanket and lots of medicine, and
that's
you're
it. Well, you picked a good time to be sick. I mean, obviously the markets have been closed over the few days there, and they're obviously back in action. But with that said, what's your favorite Christmas movie or show? I mean, there's got to be something.
So I will say that before I got sick, actually the weekend before I got sick, so the culprits of why I got sick might be involved in this discussion. So I had my two 3-year-old nieces, and I was running around with them, and I took them to the park, which was completely packed full of kids, and I'm pretty sure that's where I got this cold. But
Wow.
we sat and we watched The Grinch because obviously, I mean, come on, like every kid needs to see The Grinch. That was their first exposure. So
Yeah, nice. And how old are they?
they're 2 and 3.
Oh, okay. And so they actually had the attention span to sit there and watch it?
Oh yeah, yeah, yeah,
Wow. That's
yeah.
that's impressive. I'm 30, almost 38, and I barely can sit through a full movie. So let alone kids that age. That's impressive.
I mean, it's all about the dog. So Jim Carrey, like he does a great job on The Grinch, but the dog is like the star.
Yes. No, that's so true. We my kids actually this year took a liking to Elf with Will Ferrell.
Mhm.
For some reason they just like got hooked on him, which is hilarious. And then of course in our house it's a classic. We every year we watch National Lampoon's Christmas Vacation at least two or three times. And I feel like every time we watch it we laugh at a different part. But anyway, it's yeah, I enjoy it. In our house, Christmas is a big deal, and we love to all hang out and have some good laughs. But anyway,
Oh no, I'll
moving.
be taking down my house does look like Christmas is a big deal. Like I literally had three full-size Christmas trees, like 9-foot trees, and then I had six smaller trees,
Oh wow.
and like my house on the street, it's kind of like directing planes. So I mean, I even though I'm never home for Christmas except this year because I was sick, and
Yeah.
last year because there was the freeze and I didn't want to leave town because I was afraid the pipes were going to bust. But
Yeah.
it's I do like to decorate. So
Good. Oh, that's awesome. I love to hear that. It's always good to be festive. So I follow you. I followed you on Twitter, which is now X, for quite a while, and I couldn't help but notice and ask, how is the hunt for the guy who's been flashing women joggers? Have you guys found him yet?
oh no, I mean seriously, like that guy is up in the woodlands
Really?
and he hangs out. Yeah, no, he hangs out by the jogging paths and even by the waterway, like really early in the morning. and the female joggers, like if they're out running alone, like this dude jumps out of the bushes and like, exposes himself and stuff like that. So,
That's
so,
nuts.
I mean, everyone knows the woodlands, it's really easy to hide. So,
Yeah.
I mean, ladies, if you're out there, just carry some mace or something because you just never know.
You don't. And I had to, because I see your feed and a lot of it's energy related, but I can appreciate you do get personal on there and more so just like not sort of career or business related stuff. And I had to read that a few times. I was like, are you messing with, like, are you just trolling people or what? And I was like, no, I think she's being serious about it. This is actually
No,
happening.
like literally yesterday, I go to check my mail after having not checked my mail for a week. And I've got three female neighbors that are standing by the mailboxes and they're all talking and they think that there is they they mentioned that they think there's a homeless person, living in the bush up here,
Mhm.
near Lake Woodlands. And I'm like, no, 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 that's not a homeless person. There's no facilities up here for a homeless person. There's
Right.
no kitchen. There's no place for them to go, sleep or whatever. I'm like, but there is, a pervert that's been like doing this for like more than a year. And you find out about it like on social media, right? Because it's like next door
Yeah.
and the neighborhood apps and stuff like that. And I'm like, if you're ever out at a weird time and somebody's rustling around the bush, I'm like, it's not a homeless person. You're about to get flashed, or you see something you don't want to see.
That is
These old
so
ladies, like they just look at me like they're so naive, and I'm like, no, I'm serious.
that I hate to laugh, but that is just so obscure and just so random. But at least now you've warned people. I feel like you're doing a good deed for the community.
Well, I mean, this stuff happens more than people realize. Like actually, so I grew up in Oklahoma,
Yeah.
and the Illinois River in Oklahoma is like a hot place to go float. And like me and a bunch of girlfriends, like, either one weekend or who knows, maybe we even skipped school when we were in high school to go float the river.
Yeah.
And it's like an 8 mile float. And there wasn't many people on the river that day. And we're like halfway down, and then here comes some pervert, and he completely exposes himself, this boat full of high school girls, and starts doing his business, and we're
Oh
like
my God.
paddling like hell, like we're like, oh my God, get out of here. But when people do stuff like that, I mean, think about it. Like you've got people paddling on a river, people jogging, I
Yeah.
mean, what do? Even if you call the police, like there's no way for them to get there in time to
Right.
respond or find this person before they just disappear.
Yeah.
So these people do their things for years.
That
They
is so
literally will
true.
keep doing their thing unless they just happen to get caught by a good Samaritan. You
Yeah.
know, if some man just happens to be out there and then chase the guy down and
Well,
put a hurt
and
on
that's
him.
and for the listeners out there, you have to ask yourself if you were on a trail and you as a man or even a woman, like who out there would actually attack this gentleman who's streaking or flashing and tackle him knowing his pants may be around his ankles? Like, would you do that or would you just keep running? There's got to be a
Exactly.
hero out there somewhere.
Exactly. I mean, but well, I mean, I think anyone who does do it is probably some father or some husband
For sure.
who this person has visually assaulted his family member, and he's just out for revenge. And
Yeah. I
God
mean,
love him.
it's
Like, that guy, he's got a job to do up here in the woodlands.
no kidding. Well, you always have to consider, and I don't worry, audience, we'll move on from this. But the last thing I want to say is I always, and this is kind of a downfall of mine. My wife hates it, but I always like to at least consider the other side of the argument. And so there's a reason why someone would stand in the bushes and flash people, but it's like what would possess someone to do that? Is it like maybe they had issues as a child, they didn't get enough attention? My brain always goes into like the why is this happening? And I just couldn't for the life of me figure out why someone wouldn't want to do that.
I
I
mean,
don't know.
you're a man. You know that there's a percentage of men that are just twisted.
Of course.
So,
And
so,
yes,
so
people
that's
have some
that's what
weird
it
fetish.
is.
Yeah,
Exactly. It's just a twisted person. They're twisted.
that's true. Well,
And
anyway,
sometimes it doesn't have anything to do with their parents. Sometimes they're just twisted. Just
Some was cross-threaded along the way, wasn't it?
Exactly.
So speaking of X real quick though, you do have a badass banner, which is like some graffiti of a bear trap heart looking art thing. What is that? Is that something that you saw or a picture? Like it's actually really neat. I like it.
Yeah, like I really like street art, and that was some street art in Lisbon, in
Oh,
Portugal.
okay.
And you know, I like I said, I just liked it, and I made my banner, and it's been my banner for years.
Yeah,
So
no, I noticed it earlier and I was like, I want to ask you about that.
yeah,
Oh,
I was like hiking along the rail, the little streetcar rail. So I was
yeah.
like shortcutting while I was there, you know, exploring. And yeah,
Yeah.
they have really cool street art like all over Lisbon. So
Okay, cool. So that's a picture you actually took. That's super cool. I can appreciate graffiti and art like that. We have a short-term rental here in Houston, and we hired a graffiti artist to come in and do a wall of a Houston themed graffiti. And yeah, it's taken well. People seem to like it, but I can appreciate that. So moving on, I'm curious now. We're getting close to this. Will get released in January, probably. But what have you learned about yourself in 2023? Was there anything transformative with like whether it was business or anything like that? Does anything come to mind?
oh, I mean, 2023 definitely humbled me because coming into the beginning of the year, I mean, like I was real bullish. You know, I
Mm,
thought we were set to run, and the sector was going to have 3 years in a row, and that's not what happened. You know,
mm,
we had a year of volatility, and a lot of names are, you know, the quality names are basically ending the year flat, and you know, and some names are even, you know, ending the year down 50% or whatever. And actually some of the international names did well, and they might be up 50%, but that's really just because those markets were so depressed from their currency weakness in previous years that this year they finally like got a little bid because the US dollar, you know, was weakening a little bit.
yeah.
But yeah, like I said, it was you know, at if we were talking last year and I was giving my presentation or some presentations that I built for different investors, I mean, I was very bullish, and I had like all my data and all my slides, and this is what's going to happen. And then, you know, obviously not.
Yeah. Well, can
So
you
so we started out, you know, like on January 1st, I think oil was about $77 a barrel. And then now today it's basically 74, 75. So you know, like I said, that this, you know, the commodity is flat, but
Mhm.
it's had like crazy swings. Like, I mean,
Yeah.
it hit in the 60s like 4 times. And then actually in September it was 95. And then 2.5 months later, it's bled down into the 60s again. So the volatility, like I said, it's humbling, you know,
Right.
and because I'm not someone, you know, who comes from the financial realm, who you know has sits at a Bloomberg terminal and gets all these alerts and things like that. Like I have to do a lot more post-mortem analysis to figure
Uh,
out what I missed, you
right.
know.
So looking back, are there any factors or anything that you would put a little bit more weight towards when looking at sort of future outlook, like things you didn't consider? Obviously, geopolitics, there's a lot of unknowns that can hit the market, which then create volatility. But does that sort of change your strategy, if you will?
I would have never guessed that US oil production was going to be at an all-time
Oh,
high in
I
September this
know.
year. So
I
the
know.
basically the strength of that, you know, caught me off guard because the public companies, which I'm monitoring, you know, quarter over quarter, they weren't showing that production growth. And then even when the rig and the service companies were presenting, a lot of the ones that I was listening to, they weren't conveying the weakness that the market was basically, you know, putting into them and selling them off and whatnot. And really, it wasn't until October that I finally got my hands on some information that basically broke out the production from the privates and the public companies. And
Yeah.
I saw that the private companies had been outproducing the publics for nearly 2 years. And I was kind of always under the assumption that the private companies weren't producing to that scale. I
Right.
didn't realize that there were like 9 really big privates in the Permian that had just been like literally ramping up as hard as they could possibly ramp
Yeah.
from 2020, like really from the middle of 2020. They were scaling, all their services like much harder than the public companies. And actually since then, they had grown their production over 30%. And so that's where like this big surprise came from, because like I wasn't talking to any private companies. I was only getting publicly reported information quarter over quarter.
Yeah.
And so that, like I said, that, in hindsight, that was a huge miss. Because if I would have had that same quarterly outlook coming from those private companies that I had from the public companies, I would have better understood their scalability and how aggressively they had picked up equipment in the prior 2 years. And
Yeah.
then this year they pretty much dumped a bunch of rigs. Like the public companies rig counts pretty much had stayed flat. So I couldn't understand why everyone was just like, oh no, these rig contractors, they're going down. And I'm like thinking, I'm like everyone I'm listening to that's their clients are basically, I mean, pretty much flat on rigs. I'm like,
Yeah.
or the a lot of the companies were like, oh, we're going to be down 10 or 15% like on the rig count, but their stocks, like if you look at Patterson and Neighbors and these late drillers, I mean, they've been cut in half, like they've
Yeah.
been decapitated this
Yeah.
past year.
No.
And I do think that that's like way overdone, but I
Hmm.
at least I understand now where it was coming from, you
So how
know.
do you, and I'm similar to you a lot. I mean, obviously my world's a little different, but I'm always looking at, who's doing what, where the activity, who's spending the money, where's the production coming from? Because for us on the oil field service side, we're trying to then, strategize and figure out who we need to approach. Um, there's some good tools out there to capture rig count, but unless you went through every operator and then listed it out, whether it was private or public, it'd be kind of grueling. So, are there any good resources that you go to now that because you said you finally in October got your hands on with the privates what they were producing versus the publics? Was it just kind of process of elimination, or how did you get that, or
Yeah,
who
so
provides that?
so my first hint was a report that came from RBC Capital Markets,
Okay.
and it was the Permian Basin rig count trends. And that's where I saw that there was this huge disconnect in the rig count between the publics and the privately owned companies. And basically, like for all of 2023, the rig count has been falling, but really only on the private company side.
Yeah.
And the reason for that is that a lot of these private companies, or even really all these shell companies for the most part, these small companies are built to be sold. They
Right.
they got in, and normally they want to sell themselves in 3 to 5 years. But with what happened with the price wars and then with the COVID crash, like it delayed a lot of these companies getting out. And so coming out of COVID, a lot of these players were like, it's now or never. We're going to
Mm.
dress ourselves up. We're going to look like a house on fire producing. We're going to get as many drilling permits as we can shore up, and we're going to make this company look real attractive, for a takeover. And so of the 9 companies that basically drove the production output from the Permian Basin, 3 of them have already been acquired, and
Yeah.
a 4th is currently marketed itself.
Yeah. So I mean, I know like Hibernia, Taprock was part of that. There was a good handful of them. Um, but yeah, it has been interesting. And with regards to like where the production growth has been coming from, is it a function of just they've just increased their activity, rig count, frac spreads, or are they drilling better wells in better rock, or is it a combination of it all?
I think it's mostly wells, because they've also heavily drawn down on the duck count. So
Yeah.
last year basically they only burned like 200 ducks from the duck count in 2022. But this year we've seen like 1,000 ducks get used up. So the ducts are drawing down much quicker. So again, it's like, how do you make yourself look like you're cheap and yet producing a whole lot? Well, you take advantage of those ducts that spin from a previous year,
Yeah.
and you bring forward that production. So but I don't think that this is a situation that can repeat itself year over year. Like right now, the EIA is calling for another 600,000 barrels in US production growth next year. And I just don't see where it's coming from, because I feel like there might be a little bit of growth, coming from the Gulf of Mexico, because we've got some, I think Chevron's got a field coming online, like a deep water field. But I have a real hard time believing that the Permian can continue to grow given the reduction in rig count this year and then the huge decline in DUCs. I
Yeah.
mean, they would have to aggressively pick up rigs in order to try and grow, because they don't have a lot of reserve yet, a reserve left, of DUCs ready to go.
How
And
much? Yeah. How much in being like very well exposed to the drilling side of the business, I do research for the company I work for, and over the years, drilling efficiencies and mainly the footage per rig per year of production hole has actually considerably gone up. And so, I mean, you're obviously a drilling hand as well. Do you think there's quite a bit more meat on the bone with regards to drilling efficiencies and reducing cycle times and like doing offline ops? I mean, could the increase in production just come from just drilling faster and drilling more wells with less equipment?
I don't believe it's all coming down to lateral length and efficiencies and things like that, because there's trade-offs. So if you're drilling a longer lateral, then now you've got to worry more about well spacing, because now they have to be careful not to interfere with the well next to them, because if they start fingering between those fields, like they basically just junked, two wells.
Yeah.
So and then also, some of the data that I've been looking at indicates that these wells are coming online at a higher peak production to start, but that they're declining more rapidly. So it's like, yeah, you look good that first year, but
Yeah.
that following year, now you're kind of in the you're hurting,
Right.
compared to what the wells were doing before. But I mean, like, we're going to need more data.
Yeah.
I basically, what I'm saying is, I'm seriously skeptical every time someone says, "Oh no, this is how great we are. This is the wells and everything else." I'm like, we're still talking about tight rock, and you did not, even when they talk about refracts. Oh, we're going to get all this extra production from refracts, and I'm like refracts. I don't know of any secondary recovery technique that ever outperforms the first recovery.
Yeah.
So show me. Let's just say
Right.
that. Show me. I don't believe it, because what I see is the duck declines and the rig count being played with. And I'm like, yeah, you have some efficiency gains in there, but it's not what I don't believe it's what people are trying to sell in the
Hmm.
data rooms and in their investor presentations and whatnot. So
Yeah. No,
I'm always
it's
cautious of weakness, ahead, and with tight rock, that weakness shows up really quick. So let's see what 2024 looks like, because
right.
there's high expectations. There's high expectations for the US. We delivered another million barrels in 2023, and now they're thinking we're going to deliver an extra 600,000 in 2024. I'm like, show me. I don't believe
Yeah.
it. You know.
So I guess the only way we could get there is by just drastically increasing rig count and obviously frac spread count, because I think we got to be closer to that 300 mark. I think right now we're at like 260 something. So again, I just don't see. I'm with you. But again, as rig count and things started slowing down, this summer. I would have thought we'd have been at like 12.6 maybe by now, 12.8, but like we're well above 13. And it's like, where in the world or
It's
how
it
did
was those extra 800 ducks.
well,
That's
yes, they've
800
been drawing
wells.
those. Yeah, no,
I
they've been
mean,
drawing
so like
those
I
now.
said, we completed 5 times the ducks this year that we did last year.
So how much, like, it'd be tough to say, but ballpark, how much of that increase in production, what's the percent that comes from the ducks, do you think? More than half of that increase or
I don't
less?
know. I don't know. I mean, I don't have access to enough data to be able to see that.
Fair
I'm
enough.
sure someone has it, but
Yeah.
I mean, like I mean, honestly, like I couldn't even tell you how many wells were completed this year in the Permian, because if you knew how many wells were completed this year in the Permian, well, we know 1,000 of them were ducks, and then you could kind of ballpark it a little
Yeah.
bit.
Yeah.
Um,
No,
I might
I
I might dig for that a little bit, because from time to time I kind of have wondered, like how many wells they're actually completing there a year. But
yeah. No, I'm sure there's folks out there. I don't know if you've ever lurked or seen it. Novi Labs has a great tool with a ton of different dashboards and data. I don't know, maybe Ted Cross, if you're listening, you can pump some information out there for everyone to look at.
yeah,
Um,
it was actually one of his data shares that alerted me that the privates had grown 31%.
yeah,
So
no,
so I totally agree. Like they are awesome, and everything he posts is
yeah,
excellent. I so
yeah, no,
appreciate.
we actually subscribe to it for other reasons. Obviously, we're not too some of the stuff we don't use, but some of it's really interesting for us. But man, there's just so much information piled into there. I've probably gone through about 50 or 60% of it, but a lot of it's over my head. But I don't know, maybe I'll do some digging too, because I find that
Well,
pretty
so
interesting.
here's another little jewel. So Barclays, after they've had their discussions with their clients who are privates, they think that privates are intending to spend 4% less next year than they
Um,
did last year or this past year. So again, it's like, well, so if you were dropping rigs all this year, they actually need to pick up a few rigs just to have the same spend. Um, so
yeah, no,
somebody's potentially going to pick those rigs up, but yeah, the US spend for next year is expected to only be like a 2% increase
yeah,
over 2023. And for the rest of the world, it's expected to be a 5% increase. And this is going to be like the first time in a decade that the US wasn't the most rapidly growing spend for any given year. So I do think that we've kind of hit, critical mass here,
yeah,
and just need to chill,
yeah.
and like
What do you think? I mean, looking at it, kind of taking it a step further into next year, do you think the M&A theme is going to continue? Like, what's your sort of outlook on that?
oh yeah, no, I do think that we're going to continue to see consolidation. Just like the Chevron CEO Mike Wirth said, there's way too many CEOs per barrel in this industry.
Yeah,
And
I saw that. That was
you
an
know,
interesting comment.
Yeah, well, and then for a decade, we haven't been exploring and organically replacing reserves. So
Right.
these companies, they've continued to produce for a decade. The only way they can kind of shore up their books on their reserves replacement metrics is to buy barrels. So
Mhm.
I guess for these companies that are looking to do M&A, these pull backs in oil price probably help them a little bit,
Yeah.
because it's much easier probably for them to get what they feel like is a lucrative deal when oil is 70 versus when oil is 95, you
Yeah.
know. But
Do you think the valuations are close to what they should be, or do you think they're under or over? What's your take on that?
I mean, I feel like the sector is underrepresented in the S&P. And, like I would like to see the sector re-rate. And I mean, if 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 the energy business is producing, 10% of the cash flow for the entire economy, I mean, I'm like, I don't know if that's what it is, but I'm just saying that. Like I would like to see it be 10% of the S&P, but
Mhm.
I believe right now it's probably only 4 or 5%, which is really, half where it was like, in prior cycles.
Yeah.
So, so yeah, I mean, everyone who's hanging out in the sector still, that's what they were waiting on was the re-rate, and instead what ended up happening was in 2023, energy ended up being the most sold sector in the stock market. So
Oh
basically,
wow.
since it did really good, in 2021 and 2022, this year everyone, the recession narrative was rolled out, and everyone was just dumping it, dumping it, dumping it, and then rolling into the largest 8 tech companies.
Mm.
That's kind of what happened this year. So
Mm.
anybody holding energy, with the, for the most part, took it on the nose, or were flat, or maybe they had some of these little pearls that did perform well. Like for instance, Petrobras, they were up like 50% this year. But
Yeah.
that's because everyone was scared last year that the company was going to get nationalized.
Right.
So when that fear went away, the company was able to, you know, um, have some money run into it, and it performed really well. But so
Yeah.
it's like some of these names, what moves it isn't the oil and gas thesis so much, is that they were punished for other reasons.
Fair
So,
enough. So
but yeah,
we
it's like this year, like I don't know what it is today, but it's probably pretty close. So as of last week, like I said, out of all the sector fund flows, energy was hit the hardest. It was down like more than 10%. Um, I
Hmm.
mean, like I said, just tons of selling all year, really.
Yeah.
And like when you looked at the crude oil managed money, like last week, it was more short than it was even during the COVID crash.
Hmm.
So just more bearishness right now. Like people are more bearish than ever. It's crazy. And the current narrative that's flying around is, oh, like they basically beat us up with recession all year long, recession talk. And
Yeah.
then I guess people aren't listening to that anymore. So now they've come up with, well, OPEC is going to fall apart. And they're like, OPEC's going to flood the market. OPEC's
Well,
going to flood the market. They're going to get pissed off because the US is producing all-time highs, and yet OPEC, like when you look at what they're producing 4 million barrels a day less than what they were in January 2020. So OPEC has really shown restraint, and
yeah.
then unfortunately our private shale producers, thinking only of themselves, have grown production as quickly as they can,
Yeah.
and the quicker someone buys them, like I actually made a joke that Oxy just did, this sector a favor, because Oxy just bought Crown Rock, and I'm like, yeah, so put them down, someone go buy Endeavor, put them down,
Yeah. No,
all
well,
these
in
big
Denver,
companies
that's
just like show some discipline, because like they're creating these excessive swings, in the
yeah.
market. And for what? Like, I mean, I can understand if they're trying to, dress themselves up to sell, but anyone who's wanting to stay in this game long term, it's like you're just racing toward the finish line.
Yeah.
And like, why can't you just wait a little bit, sell your oil at $90 a barrel instead of 65?
Yeah. No,
That's what OPEC's doing. OPEC is playing the long game.
yeah.
They feel that the US shale is eventually going to top, and as it subsides a few million barrels, they know that, everyone's going to show up on their door and say, okay, well, give us your barrels now.
Yeah.
And
No,
then
that's
they'll be able
true.
to control the market, and actually, like even today, Russia, basically they're calling for oil to be 80 to $85 a barrel next year, and Saudi kind of also needs those numbers in order to balance their budget. So you've got the two largest players
Yeah.
in OPEC plus, and they seem very well aligned that
Yeah.
they're trying to do what it takes to get oil stabilized at $80 to $85 a barrel. We just
Oh,
need US shale to quit breaking things, you
yeah.
know.
No, that's
I'm like, come on, if y'all watching this, just like calm yourselves.
yeah. Well, that I know looking at so Rory Johnston puts out some good information. It's behind a paywall, but he put out a big deck recently on OPEC and all the countries and what they're producing. And there's one that really stands out is Abu Dhabi's capacity. They have dumped a bunch of money into growing their capacity, and everyone else has either gone flat or actually reduced. And so and then I was also hearing Saudi, a guy who used to work for Baker Hughes that I know, he spent a lot of time over there, and he was saying that they've been just sucking up jackups and barges and rigs, and they don't have them drilling, but they're almost like adding a bunch of rig capacity to their fleet with the expectation that maybe once this thing does once US shale or once there's a disconnect between demand and supply, that they'll
Yeah,
just come in and then take advantage of the opportunity. And so
you
it is
basically you basically have to go back to 2012
yeah.
for the rig count in the Middle East to match the rig count of what it is now. Even though they're soaking up a lot of rigs, their rig count is still less than what it was
Yeah.
from 2013 through 2019.
Right.
So so yeah, I mean they're preparing or whatever, but they're not back. They're not back. And there's no reason for them to be. There's no reason for like for them to go drill a bunch of ducks.
Yeah. Yeah.
That's not how they roll, you know.
Right. Right.
But Latin America, their rig count is back. Asia Pacific, their rig count is back. But
Okay.
you know, um
That's it is interesting. I haven't really looked at international rig counts in a long time. But I've been slowly looking at it now just because I'm curious and just trying to again just wrap my head around it more from a macro perspective than just focused here on the US, because obviously what everyone else does. And there's a lot of supply coming out of other countries now, which we didn't really consider, 5 or 8 years ago. But real quick, talking about the other side of the equation on the demand side, there's all this talk about peak demand, peak demand. Where do you, and I mean, that can be a long conversation in itself, but where do you see demand going next year? I mean, do you see much growth? Do you see it fairly flat? Like, what's your thoughts?
So most models align in that demand probably isn't going to peak until 2050. So 25, 30 years from now.
Yeah.
Um, the recent issue, which was why oil pulled down from 95 to like $68 a barrel recently, was because China revised its expectations down. And really it's just
Yeah.
small changes in supply and demand which create large imbalances in the market. So they revised down, and it looks like they're going to stay down through the first half of next year, and then the second half of next year they're going to get back on track.
Uh,
So
okay.
like right now, China's buying 50% of Russia's crude, and India is buying 40% of Russia's crude. So
Okay. Wow.
plus China's, it's kind of always hard to know exactly what they're doing anyway, but I would say that so those two economies are the economies that everyone looks at to
Yeah.
really be providing the demand growth in future years, and now Russia is their top supplier. So I mean,
Huh.
this whole shell game that we're playing here, sometimes I wonder if whether or not this is going to end up being to Russia's benefit in the long run, because they've kind of locked up the BRICS. They've
Yeah.
locked up now alliances with the two countries that everyone wants to be feeding into for growth
Yeah.
expectations, and only time will tell.
Yeah.
So
No, it's an interesting game. On the natural gas side, what are your, so obviously right now we're exporting, I think like 12 or so BCF a day, and a bunch of LNG capacity or export capacities coming online. What's your take on gas? I mean, are we sitting pretty, or do you think gas prices are just going to stay low? What's sort of your overall take
So
for that?
we've had so gas prices got really low this year because we had a mild winter last year. And that mild winter meant that we went into the summer with record high storage, and then next thing you know, there was no place to put the gas. On top of that, there were like 50 fertilizer factories in Europe that have been shut down.
Yeah.
There's a bunch of gas to power stations have been converted over to coal. And so it's like on all fronts, your consumption was less than what it would have been in prior years. So, and then unfortunately, right now, it almost looks like we're positioned to repeat last year's winter
Yeah.
because this year's been a warm winter. So, I mean, if we don't get like a nice hard freeze somewhere that lasts for weeks and weeks, which could still happen, we
Yeah.
could end up having like a long winter that runs into spring. But if we leave this winter season with record high storage again, I don't think you want to be invested in natural gas,
Yeah.
or maybe even shying away from natural gas, companies because they might have some of their production hedged,
Yeah.
but I mean, as of this moment, there's not a huge. I don't see a huge catalyst um,
For
next year
gas.
unless the weather, like I said, dramatically changes. So
Right. Um, on that front, uh, do you, like with but like long term, would you say natural gas, aside from like winters, because obviously weather plays a huge role in natural gas prices, but once we slowly start getting this export capacity online, I mean, do you think the markets are still going to be pretty favorable for natural gas? Or do you think, because I mean, there's obviously other parts of the world who sit on a ton of reserves.
yeah, I
Is the
mean, the,
bullish
the
case
med is
for,
scaling up. The med will be feeding into Europe, and there'll be less need for us to be shipping LNG, to Europe.
yeah,
So, there is tons of natural gas all around the world. What has kept a lot of those fields from being sanctioned is the volatility of the gas prices. So it's
yeah,
really hard to get these things over the hurdle. But I mean, I do believe natural gas is the fuel of the future. And
mhm,
in our lifetime, we're going to see that become dominant and a stable place to invest. But I mean, right now it's the widowmaker.
yeah.
So
So wouldn't it make sense? I mean, because service costs arguably are they're not they've come down quite a bit. Wouldn't it make sense for natural gas focused companies to be drilling a bunch of ducks right now?
I don't think the prices have come down that much. And
Oh,
and, and and like there's also a lot of rig companies that on their last call said they will lay a rig down before they discount it. And
yeah,
the ones that weren't discounting rigs, they were only discounting like one-offs. So it's like if you had a short-term gig and you're going to go drill one well, yeah, we'll give you a discount. But they weren't doing any long-term contracts on discount.
yeah.
So
No, I recall hearing that too. Is like they're really they're focused on margin and not necessarily volume. So it makes sense what you're saying. Is I see service costs have come down, but rig con like day rates certainly haven't, or at least not enough, like you said, to make an impact. Um,
I think just one-offs. I think just I mean,
yeah,
like we'll see, we'll see here in another month when these companies start to report.
yeah,
But yeah, I don't think we're going to see a whole lot of revenue misses.
yeah. No, I'm with you. Lastly, I want to touch on we spoke a little bit before we started recording about ETFs, and there's an interesting project that you may be involved with, but nonetheless, can you kind of describe sort of this new I guess, ETF that you've been exposed to, without giving any details. But I just think that kind of the structure of it is really interesting and something to look forward to.
Yeah, so basically, I was contacted almost a year ago now by someone who is a financial advisor for another fund, and he's probably got 30 years working on Wall Street and advising funds and running money, and he was interested in starting an energy fund because he believes, and this is somebody who actually just ran two tech funds, but he strongly believes that energy, going into the next decade is going to be where the money's made. So he wanted to launch an energy fund that's kind of where the money's kind of allocated based off of the energy mix. So if coal is 10% of the mix, then coal is going to be 10% of the fund. And same thing with oil and natural gas and nuclear and whatnot. So he's already got a handful of people that are that he's gathered, like somebody from refining, and I think he's got a chemist, talk about the different rare minerals, and almost all these guys have CFAs.
Okay.
So they're money people, but apparently the chemist told him, if we're going to do this, we need a petroleum engineer.
Yeah.
And so he had, like, I really just know him because he started commenting on some of my posts,
Yeah.
and then I would comment on some of his stuff because he was sharing interesting articles from time to time, and we'd kick ideas back and forth.
Wow.
And I think it was spring or summer of last year, like we basically had a Zoom call, and he told me what he was thinking about doing, and he asked me whether or not I'd be interested, and I was like, sure, when you have more information, like, let's talk.
Yeah.
And like 6 months or whatever went by, and I thought, well, maybe he decided he wasn't going to do it, or maybe he found someone else. And then next thing you know, he's like, sends me a meeting, and he's like, okay, I'm ready to roll. Like, we need to have another Zoom a Zoom meeting, and find out whether or not you're the right candidate for this. And
Yeah.
I said, okay, well, send me your prospectus. And that's kind of why I had a little bit of information to tell you about it, just because I had read through his perspective. So basically, for the last year, he had built a model portfolio, and he was running it like in the test phase.
Yeah.
And the model portfolio outperformed the market. So he's already got his proof of concept, and like I said, he's got a track record because he's had other funds, and
That's
who
fascinating.
knows, maybe I'll end up joining the team as an oil advisor,
Wow.
because you
That
know
is super interesting, and appreciate you sharing that. I think it's very smart. And again, there's a little bit of proof there, already running it this year. And so all the
Yeah, I
best.
just think it's really hopeful that someone who used to run a couple tech funds now wants to start an energy fund.
Yeah.
So maybe that's just a little pearl. I'm like, hopefully there's a whole lot of other people that are thinking the same way. Because again, it's like, if we're going to re-rate in the marketplace,
Yeah.
we need money peeling out of the Apples and the Amazons and
Yep.
the Microsofts, and heading over into energy. So
Yeah. No, it's lastly on that. So I follow a podcast called the All In Podcast, and it's from guys out of Silicon Valley who have been very successful in the tech space and who've ran companies, built companies, some of which Google. Well, there's a gentleman originally from Toronto. His name is Chamath, and he was saying on there like a while back about all the, like, he's going to start really focusing on energy and investing in energy tech and just the energy transition in itself. And he was like, yeah, there's not a lot of people, like, right now obviously tech is sexy and it has all the buzz, but he said, I don't think people realize how much money in energy that there is and how much money there could be made. And so it's interesting just like hearing what you're saying, and then folks who've been traditional tech who don't have anything to do with oil and gas or energy for that matter, are now looking like, hey, this is a big deal because energy demand's going up and the space needs a lot of money. And so the private
the
sector.
real upset is interest rates. because
Yeah.
with high interest rates, these tech companies, the small ones, can't service their debt. And
Right.
it's also going to like feed over into oil and gas, because large companies and NOCs can self-fund. They have
Right.
enough free cash flow that they don't need to go get loans to do projects. But small companies will be capital starved, um,
Mm.
potentially with these high interest rates.
Yeah.
So it's that's kind of something else to be, on the lookout. Like any, I mean, free cash flow is king,
Yeah.
but if you're not producing a lot of it, if you're outspending your free cash flow, I mean, you don't want to own that in a high interest rate environment.
No kidding. No
So
kidding. Well, I think that's a great way to close out. Christine, it's been an absolute pleasure to have you on. I always love your thought leadership and just overall outlook on things. Where can people find you? And what I'll do is I'll put the link in the show notes, but where are you most active?
I'm most active on Twitter, so as she drills, and
Yeah.
I'll occasionally post stuff on LinkedIn. But I mean, my previous managers and bosses are on there, so I've got to be a little bit more astute on LinkedIn. Whereas I get a little bit more gritty sometimes
I
on
love it.
Twitter.
You
So
get the raw and uncut from She Drills for sure. Awesome. Well, Christine, I really hope you have a wonderful 2024. We'll have to I'll be following you and hopefully engaging, but we'll do a 2024 wrap up in about 12 months from now if you're open to that.
yeah. Like I said, hopefully the market hasn't fallen apart, and I'm a popper. So like I
Well, what
said,
I'll
I mean 2024 better be better to me than 2023, because like I said, the
yeah.
volatility this past year was just a waste of my life.
Well, I'm going to prepare next year. I'm going to re-listen to this right before we do our 2024 wrap up, and we'll see if we were anywhere close to what we thought was going to happen, and it'll be a fun conversation.
Well, I do think that we should be prepared to range trade into the year ahead,
Yeah.
because it's not just the situation with so this is kind of what I think is going to happen.
Okay.
The US is going to do everything it can do to keep the economy looking stable and solid through the presidential election in November. And potentially after that, whoever wins is just going to be left holding the bag.
Yeah.
So, it really, I would not look to the US to be driving demand growth. I kind of look to China and India.
Yeah.
So I do hope that China has its recovery in the second half of next year, because that would be the best possible situation for oil bulls. If China
Mm.
remains weak, we're screwed.
Yeah.
So
Mm.
until some of this shale production burns off. So,
Yeah.
but
Well, no,
but you got to think too that anytime there ends up being an imbalance, like if all of a sudden China starts ramping up and we need more demand. I mean, do remember that OPEC has this 4 million barrels that they were producing prior to COVID that could potentially be their spare capacity. Now, personally, I don't believe that 4 million barrels is available, but I do believe that maybe 1 million is available, or even 2 million is available. So I
mm.
would look to them to basically start supplying into the market
Yeah.
anytime there would be a potential demand squeeze. And again, that would potentially keep the price, kind of capped, at $85 a barrel. So,
Okay. Hmm.
so, potentially sideways-ish through 2024. Hopefully, at the same time, the market starts giving us more credit and is re-rating these stocks higher, because
Yeah.
they're seeing free cash flow looks really good compared to other industries. But I don't expect any crazy $150 per barrel action happening, in 2024. Just like
Yeah.
the world looks just fine at $85 a barrel. Like we'll all be happy if we can just keep living.
Yeah. Well, let's hope. And with that said, Christine, thank you so much for the listeners out there. Let's always make sure we're approaching the energy landscape with a radically open mind. Be kind and always remember that everyone deserves access to energy, and we is greater than me. Thanks, everybody.